Okay, be honest with me for a second. How many times in the past few months have you thought, is this actually a good time to buy a house or am I making a big mistake? If you had thought about it, you're not alone. I hear this every single week from my clients, my friends, and even parents at school drop off. And honestly, I get it. It is a big decision. The world feels a little bit shaky. Prices still feel high. The dollar isn't stretching the way it used to. AI stocks feel wild again like the dot-com era. We are hearing layoffs, visa uncertainty, hiring freezes. And yet, at the same time, Bay Area homes in good zip codes with decent commutes are selling off the shelves with multiple offers. So, what is really going on? Is this a chaos or is there an opportunity here? Let's walk through this together. To understand today's market, let's slow down and zoom out a little. Inflation has cooled down from its peak, which is good news. But life is still more expensive than it used to be. Groceries cost more. Insurances cost more. Travel costs more. So even though the headlines sound calmer, your cash still doesn't go as far as it used to. At the same time, the Federal Reserve has paused major rate cuts because they want to be very careful about the inflation. Mortgage rates are hovering around high fives, low sixes. They're better than 8%, like the highs of 8%, but still, they are much higher than the pandemic levels. Here's why this matters for you and your family. When people feel like that their cash is slowly losing value, they naturally start thinking, where should I put my money instead? And that's why many people look forward to real tangible assets, things that don't disappear when market gets a bit shaky. That is homes, land, property, gold, anything that you can touch and feel. So the question becomes less about, is this a perfect market? And more about, is my money safer sitting in cash or in something real that I can actually own? That's the lens I want you to keep in mind as we move forward. A lot of people are talking about gold now, and that makes perfect sense. Gold has been hitting record highs. But here's the gentle truth: gold just sits there. It doesn't give you shelter, it doesn't create memories, and it doesn't help your family build a life. Real estate does. With a home, you can control $1 million asset with maybe 200K down. You can't do that with gold bars. Plus, you get real benefits, mortgage interest deductions, potential appreciation, and a place where your kids grow up, where you host holidays, and where life happens. If your cash is slowly losing value, but your home grows even a 3 to 4% a year, and you're paying your mortgage with dollars that are worth less over time, that's how the wealth gets built quietly, year after year. Try doing that with a gold coin. You definitely can't raise a family inside it, but definitely it is a good diversification tactic. And speaking of where people put their money, let's talk about AI for a moment. Every day there is another headline about Nvidia, OpenAI, or some massive tech valuation. It feels exciting, but also a little bit unsettling. Like we have seen this movie before. A few big companies are carrying the market, and that can feel fragile. One bad earnings report, one policy change, one unexpected headline, and portfolios can swing dramatically overnight. Real estate feels different. It is slow, it is steady, it is local. A good home in Silicon Valley doesn't care about today's stock market drama. People still need a place to live, send their kids to school, and build their lives here. Now, let's bring this home to the Bay Area because this is where the things get a little bit interesting. Yes, inventory is higher than what it was in 2024, so you'll see headlines saying the market is cooling. But on the ground, it is actually much more nuanced than that. Fixer-uppers not priced right are sitting longer. Buyers have leverage there. But move-in ready homes in top school districts like Cupertino, Palo Alto, Pleasanton, West San Jose, San Francisco, they are getting multiple offers. That tells us something important. Demand hasn't disappeared. It has just become more thoughtful, more selective. And that is where I see this window of opportunity. While many buyers are nervous and waiting, some families are quietly stepping in before rates move, before the techs surge, and before prices start climbing again. I know what some of you are thinking. But Sana, what about the layoffs? What about the visa uncertainties? What about the economy? And those fears are real. And I sit with families having these exact conversations every week. Right now, economy is sending mixed signals. Inflation is easing a tiny bit, but people are still cautious about jobs and costs. And that's why there is no perfect risk-free time to buy a home. When everything feels safe, prices are usually already very high. When people are nervous, that's often when long term buyers quietly make their best moves. If your job is reasonably stable and you plan to stay at least 5 years, short term headlines shouldn't stop you from making a long term investment in your life. Now, the question arises, should you buy a home in 2026? If you're thinking 3 to 5 years ahead, this can be actually a smart time to buy. Rates may drift lower later this year or next year, but they are not going back to 2 and 3%. Let's be honest about it. You can always refinance, but you can't rewind the time to buy at today's prices and before the dollar is losing value. Try to balance your life. Not all cash, not all tech stocks, but some real assets that ground your future. And most importantly, don't wait for perfect timings. If you find a home that feels right for your family and the numbers make sense, don't let the headlines scare you. And just to say this gently, when I say real estate has survived every recession, I am not forgetting 2008. That recession actually started in housing. But here is the part people often miss. It wasn't caused by homes themselves. It was caused by reckless mortgage lending, risky financial products, and loans that should never have been approved. That system failed, not the idea of homeownership. Today, lending is far stricter, buyers are much more qualified, and banks are far more regulated. The foundation of the market is very different than what it was back in 2008. So, even with 2008 in mind, real estate as an asset has endured every economic cycle this country has faced, very much like gold. And that is why I love Warren Buffett's line, be fearful when others are greedy and be greedy when others are fearful. Right now, a lot of people feel fearful. The news is loud, the future feels uncertain. But real estate has carried families through recessions and booms and everything in between. Think long term, plan thoughtfully, and make decisions your future self will thank you for. If this helped you think more clearly, please like and subscribe and tell me in comments, are you leaning towards gold, real estate, or staying in cash or staying invested? What are you planning? I'd love to hear your thoughts. I'm Sana, your local Bay Area realtor, signing off.